Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be learning certain details about how a trading account is supposed to be prepared when you're dealing with final accounts or financial account statement. Let's understand the format, the details that you need to capture when you have to prepare a trading account. So when we talk about preparation of trading account, we actually talk about the first step of how a financial statement is supposed to be prepared. So when any financial statement is supposed to be prepared, trading account is the first part that you prepare after the trial balance has been given to you, or if you have the trial balance with you with all the necessary adjustments in it. We'll have a specific sum in this chapter which will clarify all your doubts about how the adjustment entries are supposed to be entered and how a trading account is prepared. Before that, let's go ahead and understand few details about trading accounts that have been mentioned down here. There's a sheet mentioned for your reference. We'll go through each point that has been mentioned in that trading sheet. Let's understand that part first. Trading account is prepared at the end of every financial year. It is not prepared at the start of the financial year because as all our financial statements are prepared at the end of the financial year, and trading account being the first trading or probably the first financial statement that we prepare at the end of year, hence this is the first process towards any preparation of final accounts, which is at the closure of the financial year. Let's understand the new point or the next point that has been mentioned down here. Any trading account is supposed to be prepared so that it further facilitates the preparation of profit and loss account. Entities go ahead and prepare the trading account so that they can validate or they can procure the gross profit or gross loss as per the situation may be, and further use that same thing for preparation of profit and loss account. Now when you have all these details with you, this helps the investors to make their decisions of investment. Any investor who further has details of trading account or gross profit and gross loss that has been mentioned in the trading account, he further utilizes these details for the investment decision. That means internals and external users use this report to understand whether they need to interest or they need to further invest this amount in this specific investment or any other firm as per the competition. So you need to be very sure about how your trading account is prepared and whether it shows gross profit or gross loss. Let's understand the new point that has been mentioned down here. As I mentioned, this is a first step process. So after the preparation of trial balance and all the necessary adjustments have been given to you in the question, the first thing that you'll be preparing is a trading account, after which you'll further go ahead with preparation of profit and loss account and then the balance sheet. Let's understand few more details on trading account mentioned down here. Now, as we have mentioned that this specific trading account is supposed or used for preparation of gross profit or finding of gross profit or gross loss as the situation may be. Hence, this specific trading account or any preparation of trading account will further give you the details about how the gross profit has been ascertained or how the gross loss has been ascertained. So you need to be very sure that all the items that you're supposed to consider in your trading account relate only to the factory expenses. Hence, this is further used for preparation or finalization of gross profit or gross loss, after which we'll further go ahead and prepare the profit and loss account, and there we'll finalize whether we have net profit or net loss. It cannot be the situation where you'll have both net loss and net profit because it is a vague situation, and in every circumstances you will either have gross loss or gross profit, and the same thing goes ahead with profit and loss account where you'll either have net profit or net loss for your reference, which will be then further utilized for preparation of balance sheet itself. Let's understand the new point that have been mentioned down here. Now the question stays, who prepares trading account? When we have an office with our organization and we work basically from that office, and if we don't have any kind of factory for reference, we don't go ahead with preparation of trading account. However, trading account is prepared by merchandisers who purchase and sales goods. So any merchandise who further goes ahead and procures goods or raw material for production of final goods, and those goods are sold out to all the end users or the customers, then these people or these organizations are bound to prepare trading and loss account, because trading and loss account includes all the details about cost of goods sold, opening stock, raw material, purchase, procured, returns or any kind of sales that has been done, which will further give you details on the gross profit and gross loss, which is then utilized for preparation of profit and loss account. Let's understand the new point that has been mentioned down here after this specific thing. The most important thing is that it records only net sales and direct cost of goods sold. That means any other non-subsidiary expense or probably an expense which is not related to direct production will not be mentioned in here. Any item which has been completely related to the production of goods, right from the scratch material until the finished good, any expenses or incomes which are related between this process will be recorded in trading account. Once the good has been produced and it has been sold to the customer, any further expenses or any other expenses which are not related to production will be mentioned down in profit and loss account. As we have described earlier, the balance of trading account is then further transferred to profit and loss account so that we can facilitate preparation of profit and loss account for our future needs of preparation of balance sheet. Let's understand the last point that has been mentioned here in this sheet. Now, this specific transaction or these specific items will be on the debit side of trading account. That means any trading account will have these commonly used accounts for your reference. On the debit side, basically you'll have opening stock. On the debit side, you'll have direct expenses, wages, and apart from that, you'll have gross profit on the debit side of this specific trading account. Let's understand what do we have on the credit side of this specific trading account in the next sheet. On the credit side, we basically have sales, less of sales return, closing stock and gross loss on the credit side of trading account. So when we talk about debit side, we'll have opening stock, purchase, returns of purchases and any kind of direct expenses like wages, outstanding wages and gross profit. However, on the credit side, we'll have gross loss, sales, returns of sales and direct incomes related to trading account. So these are the basic things that you need to mention or that you need to keep in mind while preparing trading account. Any adjustment will also be a part of trading account, which you'll get to know once we know the format and once we go through the first sum, which has been mentioned down in the next few sheets. Let's understand few more details over here. We'll now go through the format that is supposed to be prepared while trading account is supposed to be prepared in any concern. So any organization that needs to further go ahead with preparation of trading account has to go and prepare a trading account as per the format that will be following in the next sheet. So let's understand, and you can note down this specific format for your reference. It's a simple format, debit and credit side format, which will be used and which will be further analyzed how trading account items are supposed to be placed and what are the adjustments that you can go ahead with. Let's understand the format first, after which we'll be going ahead with preparation of the sum or preparation of the trading account for one specific sum that we have mentioned down for your reference. Now, if you can see, we have a specific format which has debit side, credit side, particulars and amount which has been given for your reference. I've jotted down certain common items that are used in a preparation of trading account. Rest everything will be explained to you when we start with the sum, where we have different adjustments for your reference. So now we'll go through the format one by one and each item will be explained to you in detail. Let's go with the first debit side of trading account. Opening stock. As we are talking about entities who deal with merchandising or processing or purchasing sales, and when we talk about any kind of good procurement and selling of those goods after they've been converted or transformed into raw material and then into final goods, once this has been done, hence stock is the major important concept or component of trading account. Now, as we're talking about opening stock, it will be always mentioned on the debit side. There will be certain purchases that will be added to this specific stock if you have purchased any goods during the period of the financial year. If there are any returns, that is sales or purchase returns, will be a part of this specific stock itself. However, you need to figure out how to put in these details when we prepare this specific format or we prepare the actual sum. So purchase returns will also be a part of this, which has been also mentioned down here for your reference. If you have purchased certain goods and if you have to subtract that specific point, it will be subtracted from the purchase account itself. Now, purchase account will be a part of trading account on the debit side because you have procured goods from any vendor. So when we talk about purchase, any goods or stock that has been purchased for the production or for the sales of your standardized items, that means the business transactions, then in such cases, there might be certain defects in the goods that have been purchased and we can also return it back to the vendor. So if you have purchased goods worth rupees 10 lakh, out of which 1 lakh is the stock or the 1 lakh is the value of the stock which has any kind of defects, that has to be subtracted because we'll be recording only net items as we have discussed earlier. only net items are supposed to be recorded in the trading account. Hence, the total purchases that you have done in the financial year will end up being 9 lakh instead of 10 lakh. The reason being 1 lakh is the purchase return. Let's understand few more direct expenses that have been mentioned down here, which is a part of trading account. Now, when we talk about direct expenses, we ideally talk about all the expenses which are directly related to the production of the goods or production process. So, wages, freight, carriage inwards, all are certain items which are directly related to the production process. Wages refer to the factory employees who work inside the factory to produce that specific good. Hence, wages is a direct expenses which has been mentioned on the trading side or the debit side of the trading account. The last part that has been mentioned in the trading side or the debit side of the trading account is the gross profit, which will be then further transferred to balance transfer or probably which can be further moved to profit and loss account. If it is on the debit side, it is moved to the credit side, and that is the starting point of preparation of profit and loss account. However, that's the next step. We did not have to go ahead in that. We'll first understand how a trading account is prepared. So now that we have cleared or clarified all the details on the debit side of the trading account, let's go ahead and understand what do we have on the credit side of the trading account. Let's figure out the first item will be sales. Just like purchases, we have sales as well for our reference. Now, sales are the goods that we are selling out to the customers. Even in such cases, there might be some defects in the sales, and hence those items will be sent back to us by the vendors or the customers. Now, when we send these items back to us, or when these items are being sent back to us, in such cases, we return that because we are recording only net sales here. So, if supposingly you have net sales of rupees 10 lakhs and there are returns because of defects of rupees 2 lakhs, that means you have a net sale of only rupees 8 lakh because 10 lakh is the worth of actual sales that you have done, out of which actually you have received 2 lakh goods returned again by the sales or the vendors or the customers. Then in such cases, the net sale value is 10 minus 2, which is 8 lakh, will be mentioned in the outer column or in the net column of the specific trading account. Let's understand what are the details we have when it comes to preparation of trading account here. Abnormal loss. Any abnormal loss that we think about. Now, when we talk about abnormal loss, we are basically talking about any kind of loss which was not expected or which has happened due to certain mishap. So, if supposingly some of your goods are lost in transit, such is a case of abnormal loss, which doesn't happen on regular basis. Do you lose out on any kind of goods during transit every time you send it to the customer? No, you don't, right? So such is an abnormal loss. If supposingly there is any fire in your go down or if there is any fire in the transit item itself, in such cases, that part will be a part of abnormal loss and hence it will be mentioned on the credit side of the trading account being subtracted part. Let's understand the next part which has been mentioned here after abnormal loss. Now the next part that has been mentioned here is closing stock. So when we talk about closing stock, we basically talk about what is the closing stock being mentioned here. In the adjustment, it will be mentioned whether it is at cost price or market value. So you have to take the lowest price, cost price or market value, whichever is lower will be the part or will be the amount of your closing stock. If it has been mentioned only one amount, that will be the amount that you will be taking. However, if you have mentioned or if you have given market price as well as the cost value, out of these two things you have to compare which has the lowest value, and that value is supposed to be taken on the basis of the accounting standards that we derive, and because of that the closing stock will be always valued on the lowest of cost price or market value. Let's understand what do we have after that. That will be gross loss, the last part of trading account. So either we have gross profit or gross loss, which is then further transferred to profit and loss account to facilitate the preparation of profit and loss account itself. So gross profit or gross loss is the first part of preparation of profit and loss account. Let's understand or let's solve one specific sum for your reference, which will clarify how a trading account is supposed to be prepared. Now, if you can see, we have given down certain sum for you. You have to note down these ledger balances and certain adjustment entries before we start off with the sum. So, this specific sum has been given to you for your reference. Let's go through it one by one. We'll understand which items are given and we'll then further categorize them. Which side of the trading account will they be a part of? Now, we have opening stock 1 lakh, which has been mentioned here. Now, opening stock will be on the debit side. Hence, I'll be mentioning DR over here. The next part is purchases, which is for the amount which has been mentioned down here. Now, purchases again is an expense and hence it will be on the trading side. Carriage inward is something that is paid on the amount of or the quantity of goods that is coming in into your go down. That means whatever you have purchased, you pay certain courier charges to it, which forms as a part of carriage inward. So now that we have completed purchases or the amount which has been referred to purchases, we were talking about carriage inward. Carriage inward is something that you pay as a courier charge on the amount of purchases that you have gotten. So that will be again a part of trading account debit side. Hence we'll be mentioning debit there. Apart from carriage inward, we have freight, which also functions on the similar purpose. That means any kind of purchases that you have done, it gets delivered to you via freight, or probably you get delivered it via some consignment. It can be either airways, it can be either waterways or roadways. You pay certain tax on it, you pay certain amount on it as a delivery charge. That is termed as freight. Again, that's an expense and hence it is related to direct expenses. That's the reason it will be a part of trading account debit side, as all direct expenses are referred on the debit side of the trading account. Now we have wages mentioned down here. Wages is again a part of direct expenses. Now as you know, direct expenses are completely mentioned on the debit side of trading account. Hence all these amounts are completely mentioned on the debit side of trading account. So wages is also a part of debit side. Let's figure out next few items that has been mentioned down here. Let's go on the credit side items. The first item that has been mentioned down here, we'll be jotting that down along with the amount. We have done sales worth rupees 30 lakhs. So that means credit side of the trading account will have opening as sales, credit side 30 lakhs. Now return inwards 1,60,000 has been mentioned. If you see it's return inwards, that means something that you have sold out is coming back to you. Now this is a part of, or the other name for return inwards is sales return. Return inwards itself should give you clear idea that something is coming back to you. As a result, only those things will be coming back to you which you have sold out. Hence, sales returns is a part of return inwards and hence it will be subtracted from the sales, which will give you net sales that has happened. Return outwards is again describing, as per the definition, something that is being sent out. Now, something that has to be sent out or will have to be sent out will be only a part of something that you have procured. So, if you have done certain purchases, out of which if you find certain defects of it, that will be sent out to the vendor again. Hence, that specific part or return outwards can be also known as purchases returned. Hence, there are two things: return inwards, return outwards. Return inwards is sales return, return outwards is purchase return. Do remember this part, it will be easy for you to subtract these items. Purchase returns will be subtracted from purchases and sales return will be subtracted from sales. Now they have also given us royalty, rupees 60,000. You know this is all ledger balances and this has been mentioned in the trial balance. Now royalty doesn't form a part of direct expense or direct income because it is a part of profit and loss account. Hence it doesn't constitute a part of trading account. So we'll be skipping that amount or we'll be skipping that thing when it comes to preparation of trading account, as this forms a part of profit and loss account. The next part is gas and fuel, as this is a merchandising company whereby you have all the details, that means opening stock, and basically you are preparing trading account. Now gas and fuel, that is something referred to production process itself. Hence gas and fuel is a part of trading account and that will be on the debit side of trading account. Hence we have mentioned or we have clarified or we have segregated all these items under debit and credit side. Let's further go ahead with the adjustment, which will be further additional information that will be given to you in the question. The adjustment further states closing stock has been given with two prices. First is market value, next is cost. I have already highlighted the market value and cost itself, MP being the market price. So now you need to understand which is the lowest one will be a part of the closing stock. Out of 2,40,000 and 2 lakh, which do you think will be the lowest value? Correct, that is 2 lakh. So cost or the closing stock will be always valued here in this question itself on cost value because cost is lower than the market price. Hence, as per the rule of closing stock, which is supposed to be valued at lowest of cost or market price, hence we'll be taking 2 lakhs as a value. Let's understand the next adjustment that has been given here. Drawings rupees 30,000 is the next adjustment that has been given. So drawings, that means something has to be reduced from the purchases. That is the drawings of goods that has been done for personal use. or drawings, you can always refer it as personal use. Hence, we have to subtract it from the trading debit, which will be ideally subtracted from the purchases now. Outstanding wages have been mentioned. Outstanding wages, any expense that is outstanding, that means that is yet to be paid off. Hence, it will be added to the total expense itself. If the total expense of the wages is X amount and this amount has been mentioned here, you need to add this amount as it is outstanding. If it would have been prepaid, you would have subtracted that amount because we only calculate net amounts. So what is the net wages that you have to pay? Any amount that is already mentioned in the trial balance plus any outstanding has to be added. If there was prepaid and if this amount is already prepaid, that means the net amount that you have to pay is any amount subtracted from that specific rent. That will give you the net amount that you have to pay this financial year. But if it is outstanding, you have to add it. Let's go ahead and figure out that sum, how this sum will be a part of trading account and how we need to solve it. Let's prepare the format first for your reference. So as you can see, we have prepared the debit side of trading account and the credit side of trading account. We'll first post all the balances that has been mentioned in the ledger balances or that were mentioned in the sum for your reference, and after that we'll be going ahead with the adjustments. If you want, you can highlight those items which are supposed to be adjusted, like wages needs to be adjusted. Closing stock will be a part of direct trading account credit, so you don't need to add or subtract it. There are certain items, that means return inwards and return outwards, which are supposed to be subtracted, so you can highlight them as well. And apart from that, if there is any further adjustment related to any item, you just need to starlight that so you understand that other balances can be directly posted in the net column. Let's go ahead with the opening stock first. So opening stock was mentioned as 1 lakh, which is supposed to be mentioned on the debit side. We have posted that part. Let's complete all the debit side first and then we'll further go ahead with the preparation of credit side. So after the preparation of debit side, we'll further go ahead with preparation of credit side. We'll clear all the debit items first and then we'll go on the credit side now. So we have already mentioned opening stock as 1 lakh. We'll further go ahead and see which are the items are a part of debit side of the trading account. Now we are talking about purchase. If you see, there has been an amount which has been mentioned for purchase and there is an amount which is supposed to be mentioned for purchase returns. That means return outwards is a part of purchase returns. We'll mention that amount in the inner column and then we'll figure out what is the amount that is supposed to be or that is supposed to be further added into the net amount. But if you know, there is an amount which is referred to drawings, that is also a part of purchase. Hence, drawing is also supposed to be subtracted apart from the purchase returns. So we'll first figure out what is the amount of purchase, then we'll subtract it from the purchase return, and then we'll further add the adjustment. That means drawing is supposed to be subtracted. Let's go ahead with that part. So now that we have already mentioned purchase with the adjustments that were required, that means purchase returns has been subtracted and drawings has been subtracted here. Let's mention the net purchase that has been mentioned. So 16 lakh is the purchase total value, out of which 1 lakh is the purchase return and 30,000 is the drawing that is supposed to be subtracted. So the balance that is left is 14 lakh 17,000, which will be mentioned in the outer column. Let's mention that amount there. So we have cleared opening stock, we have cleared purchase, we have cleared purchase return, we have cleared drawing. Let's go on to the next item that is supposed to be a part of trading debit. That means freight and carriage inward. So both freight and carriage inward have been mentioned here as they are direct expenses, hence they are part of trading debit side. We'll further go ahead and see if there is any other transaction that has to be a part of trading debit. Yes, you're correct. That will be gas and fuel. So now that we have mentioned gas and fuel 20,000 on the debit, that being a debit item because it's an expense. Apart from that, we have wages and there is an adjustment related to wages, that is outstanding wages. Let's mention wages amount that has been mentioned as a part of trial balance in the inner column, and then we'll add outstanding wages because outstanding is something that you have to be added and it's a part of total wages amount. So let's go ahead and add the wages account first. So we have a total of 3,40,000. That means the bifurcation being given as outstanding wages 40,000 and the total wages amount which has been mentioned in trial balance as 3 lakh. So the total of 3,40,000 has been mentioned in the outer column of trading account. So here we complete the total of debit side of trading account. Let's understand what do we have in the credit side. The first part being mentioned as sales. So let's go ahead and mention sales here in the inner column because we'll have sales return as well, which is a part of trial balance. Let's mention both these amounts and see what is the final amount of sales or the net sales amount. So the total net sales has been done is for rupees 28,40,000, Y being 30 lakh is the sales amount and 1,60,000 is the sales return. So the balance that is left is 28,40,000, which has been mentioned in the outer column. Let's figure out if there is any other credit item that is supposed to be mentioned here. Royalty cannot be mentioned as it is a part of profit and loss account, hence it is skipped from preparation of trading account. Let's figure out if we have cleared all the credit items or if we have cleared all the adjustments related to credit items. So now we have the last part, which is supposed to be mentioned as closing stock. We have market price being 2,40,000, cost being 2 lakh. Lowest amount has to be taken, that is cost. So closing stock will be mentioned on the cost price because that is the lowest volume. So here we clear the preparation of trading account. Now we further analyze whether we have gross profit or gross loss. For that, we'll take an interim, probably the final amount or the tally amount or the between amount, which we can call any name that you can give. We call it as interim tally, whereby the debit side of the total will be mentioned on the debit side and the credit side total will be mentioned on the credit side to see what is the balance or which side is heavier. Is the credit side more heavier as compared to the debit side or vice versa? Let's figure that out first. So if you can see, the credit side has a total of 30,40,000 and the debit side has a total of 21,10,000, which clearly states that credit side is more as compared to the debit side, which gives you the balance of some amount on the debit side, which is known as gross profit. So here in this question we have gross profit. Let's go ahead and mention that gross profit here. So we have a total of 9,30,000, which is a part of gross profit. Now when we talk about this gross profit, this will be further transferred to profit and loss account on the credit side because that will be the start point of this specific question. So this is how you prepare trading account for any concerns or any entity. This is how the gross profit and gross loss is supposed to be derived. You need to figure out all the adjustment entries. You need to highlight all those adjustment entries and see the reflecting account in the trial balance because those accounts need to be adjusted in terms of these adjustment entries. Apart from that, if there is no adjustment mentioned here, you can directly post the entries or you can directly post the balances from trial balance and further prepare trading account, and then you can derive whether there is gross loss or gross profit. So for your reference, this is the sum that you can follow when you have to prepare or you have to revise trading account. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.